John, now that oil prices have rallied a bit, how have the dynamics of the commodity market changed?
Wow, it's a great question and a really tough one. I mean, the dynamics of the marketplace, I'd actually say that probably that hasn't changed too much. I think boom and bust were terms that were coined around oil in the oil industry. And so in that sense, nothing's changed. Yeah. We've seen periods of time where you get big run-ups in oil, a doubling of prices or a halving of prices. While it's been a while since we've seen something like that, it has happened in the past. So the dynamics are probably still unchanged. It's an incredibly volatile sector and an incredibly important product. And I know the investment team at Vanguard, we've spent a lot of time trying to interpret what's happening in the market and then trying to interpret the market participants' interpretation of what's happening in the market. Because, oil prices having come down as far as they have, you would think is good news. We all go to the gas station and fill up for a price that we wouldn't have believed a year ago or a year or two ago. And that should be good news. That money should be spent in other ways. So the fact that we're not seeing that sort of dividend from lower oil prices come through in terms of really sparking demand and a lot of consumer spending is to some degree puzzling. Yeah. But, the market's complicated. In the last couple of years, if there had been a boom coming out of the Great Recession, it was probably in the oil industry. A lot of drilling, a lot of investment went on there, and a lot of capacity was created. That capacity, for the large part, is still out there. There's still a lot of the I call it a game of chicken between different producers that needs to occur, and somebody's going to drop out and somebody's going to concede market share. And again, when that balance is restored, maybe we'll see a little bit more stability in terms of the price. But if I'm guessing, and I don't know where the bottom is, I don't know where the top is, but what I can say is I do think we're in for probably more volatility there.
I completely agree, John, with your assessment. The market has been really behaving as if it was a demand problem, as if oil prices are down because global demand is weak. But in fact, we have looked into that with some technical models, and we see that the supply aspect of it is very, very important, actually. And not only on the U.S. side that you mentioned with all the unconventional methods of production, we have been so successful, but even the traditional producers have come to in line in producing more lately. Iran, Iraq, right, countries that traditionally would produce a lot. For a while they were basically offline, and now they are pumping as much as they used to. And all that together basically has created an enormous glut of oil in the market that has put a supply side pressure, right? So I agree, it's a little bit puzzling because the market seems to be behaving as if it was a weakness on the all demand when the supply aspect is quite important.
And I think we are seeing some, not all, John. I mean, clearly consumer savings rates have risen. I think part was, it was an eye-watering fall, and I think, as we all know, not necessarily going to immediately see a consumer spending windfall unless businesses believe it's permanent, right? And I think we're starting to actually see that realization in the commodity markets now because of your points around the global supply overhang, which is ironic because we were talking right before the segment, right, of the stories of peak oil in 2006 and 2007. In fact, I think it was because of that environment, which is why it takes, at least 4 or 5 years, these sort of over long history of time commodity cycles for the investment to come online in both not so much shale, but certainly in ocean shore drilling. And so, in part because of that massive run up in supply capacity and through technological innovation, and we're now seeing an awash of oil supply, despite the fact that oil consumption globally is still rising, which goes to the fact that it has not been all demand. But it's also why it's unlikely that we're going to see a rapid rise in oil prices. At least that would be a surprise to me, at least over the next 2 years. Beyond that, who knows? Because I think there is that capitulation in the energy market. I think at some point it's not profitable for all the energy producers in the world writ large to produce at $30 or $40 US dollars a barrel. And so I would presume some consolidation. I just don't know who blinks first.